Well, Ms. Nakhate, first of all, congratulations, on the conference, and also congratulations on 60 years here in India. Well, the big focus right now is this big election verdict that's come through. How do you see it change things? India's, as it is, been holding its head high among, all the competition or other economies as well. And we are in a bit of a Goldilocks scenario, so to call it. Your take on how things are panning out?
So, thank you, Nigel, for being here today. Clearly, I agree with you that India is very well placed to become the third largest economy in the world. I think elections was an event where many of the people were really focused upon. As you saw that the FI flows in the start of the year to now has actually been outflows, because money has gone back to probably lower valued markets because our valuations are at historic high. Having said that, I think with the event of elections getting complete very soon, and if we were to believe the exit poll, which I do, I think we will have continuity of the government. There aren't many countries across the world, and the geopolitics and also being in our favor that the growth of the Indian economy can be relentless. And I strongly believe that this century is for India. So with that, I would say I do expect FPI flows to come back to India. FDI flows also, I think in the next 5 years will be much, much faster. If I were to give you statistics that the last 10 years, actually FDI flows actually went up to 596 billion, which is double of the previous decade. I feel that in the next 5 years, we'll have 500 billion.
All right.
And so that's why I'm very bullish, both on FDI, FI, and of course the domestic flows continue with SIPs totaling 2.4 billion in just April itself.
Indeed, and the Indian investor has matured over the years with those SIPs. Just a few years ago it was barely 3,000 crores, or now it's at around 20,000 crores, more than $2.5 billion, which is phenomenal. But the brief point you made on FI or the FPI flows. FDI, yes, we're expecting, a big bazooka on those flows, but the FI flows, they've been net sellers year to date, I think roughly around 2.5 to 3 billion approximately. In 2014, 2019, they were actually net buyers getting into the event. Do you expect that to turn around? And do you think that the FIs are waiting on the sidelines, waiting for this election verdict? And that's why, particularly in the last 45 days or so, they were selling out a little bit more in the Indian markets.
So, I would say that India outflows is not alone. It's emerging market outflows. And, if you go back to the history, as and when Fed has increased their rates, emerging markets have seen outflows. So, also the profits that most of the funds have got in India has been multifold, with our valuations being high at 23x. So in the last few months, as we discussed, funds have gone back within emerging markets to China. Even though our MSCI weightage is at 18 versus what it used to be at 8% in 2020. To your point, I firmly believe that people did not know, because if you see, if Prime Minister Modi comes back, he will be the only Prime Minister like Jawaharlal Nehru who will come back for the third year in a term. And there were a lot of ifs and buts in FPI minds, and there was some profit booking as a result, because they looked good, since they were seeing outflows, then you book profits where you're making money. And second, you're well placed in case anything happened, post any event. So I do feel that flows will come back. It may come back with the results, but we also have to do a bit and continue with reforms in line with what we have been doing. Because one thing I wanted to tell you, Nigel, while everything looks good, actually, post-COVID, if you really look at it, you saw an increase in revenue. Then the next year, if you see, in the fiscal, you saw increase in revenue, but actually margin expansion that took place because of deleveraging of balance sheets. And now if you see the last 2-3 quarters, actually expenses have gone up and margins are slightly squeezed while revenues are continuing robust. So this is an anomaly with new reforms, with new growth, we should be able to tackle, and that will bring back a super growth.
Well, that's an interesting point you made with regard to the domestic flows, because the domestic money believe that Prime Minister Narendra Modi will come back for the third term. The FI is a little bit skeptical. They're shorting the index futures. They were selling in the cash market as well. And that could turn around. And that's what could take the markets higher, even from these valuations of 21, 22 times odd. But let's focus on, the point that you were making on valuations. There are some of these MNCs that are listed here in India. And the valuations that they're getting here is at a premium actually in comparison to their so-called home country. And they have been taking some money off the table. How do you see that pan out? I understand that there could be a few more large deals that could happen on those lines itself. That is, the parent taking some money off the listed company here in India. Your take?
I fully agree with you, Nigel. It also gives me big pride, because every time, many years back, when I used to be on road shows, meeting corporates, they used to always tell me that, we are keeping on investing in India. When will I get the results?
Yeah.
Now, if you really see, the subsidiaries in India are at much higher valuations, and there are more buyouts possible going forward. There are more, people wanting to really sell stakes that are possible. You saw Bat and Timken, for example.
Indeed.
Many more coming in. But I also see a trend that big companies, like we have heard the plans in the market, like Hyundai going public. So there are a lot of people who are looking at subsidiaries to enhance their parent valuations by monetizing their stake. The stake could be to take back money home, but it's also, many of them are looking to raise stake to push that money back into India for bigger growth opportunities.
Indeed, talking about bigger growth opportunities, some of the large conglomerates here in India, whether it's the Adanis, the Ambanis, or even the Bidlas that have come back, do you think some of these companies or these large conglomerates who are waiting by, they've announced some capex plans, but now that you have continuity, you expect them to come out there and put everything on the table, say that for the next 5 years, this is our capex plan. And as we know, it has a multiplier effect as well, which will bode us well, not just in the next 5 years, but it could hold us well for the next couple of decades. Your take?
See, I wanted to just digress a bit on the capex.
Okay.
Like, why? Because everybody talks why private capex is not in.
Indeed.
And one of the things I think we don't notice enough is, while government has really put its best foot forward and have invested 2/3 of the money into the capex growth, private companies had not invested because capacities set up were high.
Yes.
Now they're touching 78-80%, and now you're seeing investments in cement, in paints, in many of these. But one thing that we forget, in the last 5 years, what has changed is that private money has really invested money very intelligently. For the first time, I've seen India aggressively investing in intellectual properties.
Yeah.
Brand building. You have, design, R&D on, innovation. So all these actually go into the P&L, but in reality should be seen in line with the capex, I feel. This will not come in your macro numbers, but if you put that money aside, put together, actually private companies have been, spending a lot more simultaneously with deleveraging their balance sheets.
Well, that's an important point that you're making, Kaku. And, I also wanted to ask you, while things are looking rosy and things are looking up and everyone wants to talk about the positives, but you want to put some caution on the table, in terms of spending, or maybe, in fact, a little larger focus on the deficit number, which as of now, everything appears under control. But some caution on the table, if you'd like to put.
I would actually say fiscal deficit is manageable.
Okay.
I'm not worried about the fiscal deficit. Rupee has been more or less stable. Our trade partners are going to only increase.
Yes.
And if if I were to recollect, Ambassador Eric Garcetti's statement that, trade between US India has now touched 200 billion and will soon touch 500 billion. Right. So I'm a little more positive on maintaining fiscal deficit in that sense. But what I would really say, the 4 or 5 risks that I see to our economy is that we have the highest population of Gen Zs and millennials, which is roughly 500 million. As they come to the market, enough jobs need to be created. That is the single biggest risk in my mind. The second, we have grown through cheap data, accessibility, affordability with data. And the 5G rollout has been the fastest in the world.
Yeah.
We have the highest data, usage by every Indian is roughly 28 GB, highest in the world. But with all of these, right, the cybersecurity threat cannot be really ignored.
Yeah.
So that's the biggest risk I kind of see. And the third thing, which is partly also putting a lot more things on banking sector. So capital markets and banking sector have to really be able to provide capital to support growth. And we need to attract continuously more FDI and more foreign flows if you want to get to the 5 trillion economy. And finally, we cannot forget about, the climate changes and our role in that. That's also going to require a lot of capital. These are the bigger risks I see than the fiscal deficit, to be, Nigel, from my perspective.
All right, Kaku, always a pleasure talking to you. Thanks a lot for joining in on CNBC TV 18. Wishing you a good conference ahead and congratulations of those 60 years here in India as well.
Thank you very much, Nigel.